Cash might once have been king, but its crown is now well and truly tarnished. Today, Australians make almost 11 billion debit and credit card transactions every year. Cheques have all but gone. Our use of cash has more than halved in the past 10 years. It's disappearing too. What's ever present is online payments and tap and go. Visa, Mastercard, debit cards, Apple Pay, Samsung Pay, PayPal. But all that tapping comes at a cost. Mark McKenzie's members include 5,000 service station owners who process 610 million payments each and every year.
And so our industry pays about $120 million a year in just processing those transactions, and they go to the banks for either processing eftpos transactions or transactions that are processed via the credit card gateways. So for us, having competition in that market is just as important in the merchant services market as it is in the electricity market in Australia.
Against the international giants Visa and Mastercard, Australia has three homegrown payments platforms. There's eftpos, owned by the major banks Woolworths and Coles, BPAY, owned by the major banks, and the new payments platform, owned by the big banks and the Reserve Bank. The plan is for the three to merge to become one. Lance Blockley wrote an independent assessment in favour of the merger.
The big players in the marketplace are people like Visa, Mastercard, and the forthcoming entry of people from the big tech area like Apple, Google, Facebook. And here we have three, in global terms, very small Australian domestic payments players.
eftpos is by far the biggest of these locals. It has almost 1 million terminals, 50 million cards on issue, 2 billion transactions a year. It's also the cheapest for retailers to use when a customer pays.
So typically at the moment, if I'm using an eftpos transaction service for a typical $70 transaction, I'm paying 18 cents a transaction. If I do it by the credit card gateways, I'm paying between 32 and 35 cents a transaction. So the risk for us is if the tension is lost in the market and the position of eftpos is weakened, then effectively we could see a doubling in our costs, which already are at $116 million a year.
Then there's BPAY, used by 60,000 businesses to create electronic bills that can be paid efficiently and directly via online banking.
You use BPAY for paying bills, you use eftpos when you're in a store, and you're using the MPP, probably unknowingly, when you use the Pay Anyone feature on internet banking.
The new payments platform was created at the urging of the Reserve Bank, which is also a shareholder. The NPP has a real-time payment service called PayID, but the take-up was slow. The Reserve Bank even criticised banks for being tardy in supporting it.
The merger doesn't really make sense for the bigger guys. It makes the most sense for NPP Australia, which interestingly is part owned by the Reserve Bank of Australia, who are both a regulator of this market as well as being a participant in the market. So from NPP Australia, in the general sense in the market, is it has been a fairly poor performer in the merchant fee services space, and so they'll be the big winners out of this merger.
The Reserve Bank indeed is the regulator and also a shareholder of NPP, with a director on the board. It was the RBA that first observed the merging of UK payments platforms, a seed for the merger of our three payment systems, eftpos the biggest, NPP by far the smallest. Business Weekend put a series of questions to the Reserve Bank about its role and perceived conflicts of interest. Instead of direct answers, we were sent links to the RBA's submission to the ACCC and to a memorandum of understanding about how conflict is handled. This includes the RBA-appointed director, Greg Johnson, head of the RBA's Payments Settlements Department, potentially not receiving certain papers or information from the MPP board, even though he's on it. But because of this memorandum, Johnson, a 16-year RBA veteran, may also be excluded from seeing sensitive Reserve Bank information. The small business community thinks the handling of potential conflicts of interest by the Reserve Bank is a complete mess.
Ross, the RBA's role in this particular merger is extremely curious. They are, as you say, a shareholder in NPP Australia. but they're also responsible for regulating the merchant fee services market, or the retail regulation market. And interestingly, they put out a consultation paper recently that says that the issues that we've been raising in opposition to this merger, that is the need for competitive tension in the merchant services space, really isn't a concern. It's almost as if there's nothing to see here. I find it bizarre that you've actually got a regulator that is effectively regulating a market in which they are participating, albeit as a shareholder.
I really believe that as a regulator, they ought to be independent and ought to be saying it how it is and making sure that the regulations work in favour of all businesses.
It's not the only worry about the merger. Small business thinks it's being thrown under the bus. The master grocers represents around 4,000 independently owned supermarket, liquor, timber and hardware businesses.
I can see that the larger banks and the larger shareholders all have an interest in wanting to make that happen. But for small business, what are the benefits? I don't see this amalgamation helping small business in any way at all.
The fear is that the merger could end something called least cost routing, which means when you tap, the merchant can choose eftpos, Visa or Mastercard, whichever is cheapest.
For someone like eftpos, you've really got to question whether there's any benefit for them at all, and whether it's really going to strengthen their position or effectively tie their hands by having the banks have greater control over eftpos than they currently have.
And eftpos is the key. eftpos is the vehicle for small businesses to be able to reduce their costs. If we are able to transact through eftpos, we will pay 40% of the cost of going through the two global cards. And that is enormous. That is just enormous.
But Lance Blockley has a different view. Though cheaper than overseas rivals, he thinks eftpos could be overrun in the future.
If this consolidation doesn't happen and we don't get a larger and more robust single Australian payments entity, that eftpos will actually disappear in the next 10 years as Visa and Mastercard expand their market share in card payments.
The ACCC's judgment on the merger is due within the next 3 weeks.
Yeah, now just to finish on that, my investigation shows that though the Reserve Bank might have been well-intentioned in buying a stake in the new payments platform, it is utterly conflicted and has hamstrung the way its head of payments operates, both for the Reserve Bank but also for that organisation, the new payments platform. It should never have been a shareholder and a regulator. That was simply a mistake. Now, even if the ACCC does come down in favour of the merger, as many suggest it will, with the condition perhaps of an extension of least cost routing for maybe, 3 or 5 years, that to me is simply not enough of a guarantee for small business that's seeking ways to reduce and not increase the cost of doing business.